Hi everybody, it's Wednesday and we're here on the floor of the New York Stock Exchange with Matthew Cheslock, an equity trader at Virtu Financial. All right, Matthew, the markets were worried earlier this week about President Trump's plans to limit foreign investment in U.S. companies. Now it seems like those rules might be watered down.
Yeah, Scott, you know, what was interesting, I think we got some clarity, and that's what the market has always asked for. They want clarity on any situation. We had mixed messages coming from various people, from Navarro to Mnuchin, about that rule that was on Monday, and that's what caused that sharp decline. So we're getting that walked back a little bit, so it's not just Chinese investment, it's any foreign investment. So that's a good sign, and hopefully that will lead to some negotiations as far as the trade tariff goes, because we took that language out of it. Now maybe we can get some further steps in that regard.
Although we're not out of the woods yet when it comes to trade, are stocks going to move in lockstep with any tariff developments?
Well, you know, it's been trading on headlines for quite a while, but we're going to start to get into earnings season, which hopefully will take some of the stink out of that, and we can start focusing on what companies did in the second quarter and their forecast for the third and fourth quarter. So hopefully that'll be somewhat muted if headlines aren't as good as we had hoped.
Let's talk about the bounce back in stocks. You and I spoke on Monday in the midst of that sell-off. The NASDAQ was down 2%. You told people that it was a buying opportunity, and that, of course, is proving true.
Yeah, you know, I mean, that was one of the sectors that was hit the hardest. So it proved, well, let's see if we can sustain that and get a further bounce back. You know, look at oil, for example, today. It's got carry and follow through to yesterday's huge move. That's what you want to see out of tech. So if we can get another rally today based on this news about the investment standards that the Trump administration wants to put in, that would be good. Then we start to get some follow through maybe to the upside. One sector that we haven't seen participate is financials. We're waiting for the stress test results tomorrow night. Maybe the financials then can carry us to another leg higher too.
And we know last year in the aftermath of those CCAR results, the financial stocks rallied in the 6 months after that. So I think investors are wondering if that will happen again this year.
Yeah, we've had 12 straight down days in the S&P financial ETF, and that's never happened before. So people are looking forward to some good results, finding out what the buyback will be, finding out how much will be returned to shareholders. So that hopefully could be an omen for a bounce back in the financials.
You mentioned the rise in oil prices earlier. Oil now over $71 a barrel. What does that mean generally for stocks? Could that be a threat if that rally continues?
It could be. You know, we got Trump to walk back some of the oil prices when it was up over 70 last time. It retreated back to 65, and then we got the news yesterday that kind of surprised the market about the sanctions on Iran. So that caught the market off guard, and that's why you're seeing that sharp move higher. Hopefully it stalls out here and it doesn't affect the transports, which was the big concern as it went over 70 last time. So it does have a dual effect. It helps the big oil, and some of those are a big component of the Dow, Chevron and Exxon being one of them, but it doesn't help transports.
You know, stocks are back to where they were in late May, especially on the S&P 500. We're at about 2732. What is the path to 2873, which was the high in January?
You know, I don't know if it's going to be a straight path. It could be long and winding, but it's going to start with the U.S. earnings, and those come out right after the holiday. So I'm going to focus on that. That's how short-term I'm looking right now, and if we can get through that with some good forecasts for the third and fourth quarter and the second half of this year, you know, maybe we'll have hope for a smoother path to get there.
But do you think that retest or maybe even a break of that level happens this year?
There's a lot to look forward to. You know, midterm elections being just one of them too that we really haven't gotten to yet. So do I think it breaks through that to the upside? I don't know, but I think it would be nice to see if we could get close to testing it. I think that would be a positive development.
Because stocks tend to do well during midterm election season.
Yeah, they do, but this year could be a bit of an anomaly because of all of the uncertainty. And again, that goes back to the word we started with. We don't like uncertainty, and we're not really sure how they're going to play out.
So with that, what would you advise investors to do right now? Do you kind of sit on your hands and wait till earnings season? Are there certain sectors you would look at right now?
No, again, I think financials would be something that you'd want to look at. If you get a good report out of that, that's going to be a big boost for the market. They haven't participated at all recently. In fact, they've been a drag on the Dow. So that could be one sector where you see some relative value.
Okay, Matthew Cheslock, we'll leave it there. Thank you very much, as always.
All right, Scott.